Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the Forex markets. Well guys, today, again, almost as yesterday, it's not much to discuss since hardly we could find something really valuable, any patterns on the major currency pairs. I also have taken a look across the board, so taking a look on the Great British Pound, the Japanese Yen, New Zealand Dollar, Canadian Dollar. Well, it's really nothing really valuable that could be worth it to shift to some different pair. So today we will focus on the euro currency, although here we also, at least personally, I also can't find something really valuable, because it could happen that till the 30th of October market will freeze, because on the next week we will get a lot of data releases. There will be retail sales release, CPI. Right at the 30th of October we will get the gross domestic product, just some few hours before the FOMC meeting will start. So that's why hardly investors will take any significant positions before these events, especially since there are not much time before they will happen. That's why the price action, especially today and Friday, hardly will be significant. But on the euro currency, we start to see some signs of pressure of the resistance cluster that we have discussed yesterday. This really significant resistance level on the higher time frames, on the monthly time frame, start to press on the prices, at least based on the picture that we will see on the intraday charts. Just to remind you, this is a really significant level. This 137.74 is an area around yearly pivot point, yearly pivot resistance 1, sorry. 618 extension stands from the large ABCD pattern on the monthly time frame. You can't see it on the daily time frame. 38.33 approximately the major 618 resistance, also on the monthly time frame, and you can see market has hit it today. On the lower time frames, by the way, you see that this is also the completing point of this ABCD pattern that creates an agreement resistance with this level. And this pattern is rather harmonic, so you can see that market has hit this level approximately in the same area as this line point on, so just a couple of days later. Market is not at the very bottom, but even these levels are probably enough for creating of the significant resistance for the market. So on the daily time frame we do not see any reaction yet, so we just see how market has entered in this area and has reached the level, at least the precise number of this level, because as this is the monthly levels, they are more ranges, not just the precise number. So I think that we could easily add 75, even 100 pips to the upside, and market, and we will still treat this level as not been broken, if market even will pass through it for 100 pips. Recall how market has flirted around yearly pivot around 127.50 area, so it has pierced it very significant. And we still, when we're taking a look on the monthly time frame, we see that in fact still monthly, on the monthly chart, the yearly pivot point has held, and in fact that was just the testing yearly pivot point and bounced to the upside. Now market has reached the next area that's following by pivot points, the yearly pivot resistance 1, and now is most interesting things should start. Probably they will start on the next week. On the lower time frame chart, here we see very interesting situation. So you can see that market starts to hosting, and at the first glance it looks like the bullish dynamic pressure since trend has shifted bearish, but market has started continue move to the upside. But take a look what has happened. That is high wave pattern, indicates indecision. These long shadows to the upside indicate the pressure. So I think that this is really the hard work of the market trying to force again this resistance that now market stands in, where market has entered. So that is some sort of as a magnet field, so you do not see it, but and since this is rather wide, it has the precise border, some definite border. We can say that 138.30 is the level and 138.31 is not the level. It means that this has been broken. Absolutely not. So that is just an area, the wide area where market will feel the force, the pressure of the resistance. And now we see this. And in fact, if market will fail, continue move higher, this will mean that market probably will start move to the downside. So at least currently, we could call it as the bullish dynamic pressure if we wouldn't have this significant resistance. And currently, by my thought, is just this is not quite the bullish dynamic pressure. This is the signs of the struggle with the significant resistance where market now stands at. So if we take a look at the hourly time frame, you'll see even more. We see this rising wedge pattern. That is theoretically a reversal pattern. Maybe market will form something bigger because it's too small time frame. So hourly time frame is too small for the monthly chart. So I think that we should get some reversal patterns at minimum on the daily time frame. Maybe this will be the head and shoulders or something of that sort. But here also this is not very impressive for taking any long position, because this is but theoretically this is a reversal pattern. This is a pattern that indicates there is halting of the upward action. Here we also see a rather choppy action, so you can see hitting the bottom, deep retracement again, long tails now. In fact, they're reaching the same area, 1, 2, third testing of this area. So guys, in the current circumstances, I do not want to take any long position around this area based on the price action that I see currently here and on the other dollar related currencies, as the New Zealand dollar, on the Canadian dollar, on the Great British Pound. But I not want also be too hasty with the taking shorts, because that is just the first test of this area, and we will have a lot of releases on the common week. So I think that we will have a lot of time, the pretty time, to take the short position if market will give up around this area, or at least will start some deeper retracement on the daily time frame. Even minor retracement on the monthly time frame chart right from this area, that will be the 3.8, for instance, to the 3.8 support on the monthly time frame, will be the huge move on the daily chart. And this move probably should start from some reversal pattern at minimum on the daily time frame. That's why I think that we absolutely do not need to be extra hasty in taking the short positions, because here, in fact, I do not see much just yet. So yes, we have this pattern, completement point, we have a housing pattern. Well, theoretically you can try to take the short, but currently it's difficult to estimate where to place the stop. Because in fact, this pattern could be the triggering pattern to the downside, since market already has entered in the area of resistance that we have discussed. Well, maybe the market could form here some kind of the head and shoulders. That's also possible, because as you can see, head stands slightly higher than 1618. Well, other words, it's difficult to say what pattern currently we could get on the daily time frame. But the fact that I do not want to take the long position here, and probably it's better to still wait a bit before taking the short. It's better to stick with some clearer patterns, because our market could fluctuate rather wide in this area and still will be in an area of this resistance. But better to take the position when we have the clear pattern. So don't be afraid if do not scare to miss the opportunity to enter, because I think that we will have a lot of time to enter short. Speaking about the New Zealand dollar that we have discussed yesterday, so market has hit our target there, and I have taken a look as well on the New Zealand dollar today, and probably, well, I can't exclude the possibility to reaching the next target that we have discussed. It stands around 43.50, if I do not miss something. Sorry, 42.50. So that is 100% on the New Zealand dollar. You can see market now stands slightly lower than the 618. So currently I do not see any reversal patterns. Maybe market could reach still this area. The chances currently exist to see this, but I'm not sure that we will see any tremendous action today. So as you can see from our analysis, it's not much that we could do really today during the trading session. But anyway, that was not bad week in general, and think maybe if you will not find something really valuable today on the markets, maybe it's not bad idea to take the rest.